Welcome back. Seafood giant Highliner Foods reported fourth quarter earnings earlier this week. It noted that EBITDA, adjusted EBITDA, rose by about 9%. It also said market conditions in the year completed, 2024, were difficult. We're joined now by the Chief Executive Officer and President of Highliner Foods, Paul Jewer, to find out more about the company and its strategy. Paul, thank you very much for joining us. Why don't we start with the state of the seafood market. You early on in the company's earnings release of earlier this week, you referred to volatile market conditions and market pressures in 2024. Talk to us about those market conditions.
Yes, thanks, Paul, for taking the time to speak with me today as well. It was certainly an interesting year in 2024. A number of challenges on the supply front in terms of seafood raw material, and certainly a year where the consumer was under pressure with higher inflation. And that played out for us in terms of some top-line pressure. Although we were pleased by the fourth quarter, we had returned to volume growth. And despite that, through the year, we did a very good job as an organization at managing our profitability, and we're very pleased to grow EBITDA throughout 2024.
And you refer to your global supply chain as well. Just remind us how big your geographic footprint is in terms of where you're harvesting fish and seafood from.
Yeah, we buy seafood from over 20 countries globally, both from wild-caught fisheries and aquaculture. And we bring that seafood into our plants here in North America for value-added processing and ultimately sail on to customers and consumers across Canada and the U.S.
How are sales of seafood generally going? It is a very healthy option at a time when more and more people are thinking about healthy diets. What are these secular trends here, not just for your company, but the industry at large in terms of seafood sales?
Yeah, absolutely. We see the secular trends for seafood to be quite positive. You're right. It's viewed by most people as a very healthy protein. It's also very sustainable and a healthy protein for the planet. As a result, we expect to see seafood demand to continue to grow both in North America and globally, but particularly in North America, where we still underconsume seafood compared to most other countries in the world.
And what about frozen seafood? How big a part of that is of the market? And is Highliner exclusively frozen, or do you sell fresh seafood products as well?
Yeah, we're exclusively focused on frozen, and frozen is a big part of the market. And we think frozen will increasingly be an important part of the market going forward. One of the benefits of frozen, of course, is it has a lower, we believe, environmental footprint, easier to get to customers in a more environmentally friendly way, and certainly has the ability to last longer, so less food waste as well.
Okay, you refer to driving efficiencies across the business as well. That's the job of senior management. How have you accomplished that?
Yeah, and it's been across both our commercial organization and our supply chain organization. And one of the things that we've been very fortunate to do is to have some wonderful people at Highliner with years of experience in this industry. And they work very, very hard every day for us to find ways that we can just run our business more efficiently. And when we do that, that allows us to serve our customers and consumers even better and with better pricing.
Talk to us about the company's use of capital. The company has increased dividends, it has purchased shares, and you refer to strengthening your balance sheet as well.
Yeah, absolutely. We're very fortunate as an organization to generate a lot of free cash flow, and we've deployed that free cash flow, as you've pointed out, in a number of ways this year. First and foremost, though, it's reinvesting back in our business, and that's primarily by investing in our plant network, but also, as you noted, dividend increase, continued share buybacks, and we've significantly improved our debt profile. Our leverage is as low as it's ever been as a company.
Okay, and the company's outlook section of its news release, it refers to a evolving trade environment. And I've got to believe that that's a reference to the potential of tariffs in the United States, at least partially. How you and your team must have taken a look at what tariffs could, the ways in which tariffs in the United States could affect your business. What do you know so far?
Yeah, absolutely. And I would say we're looking at tariffs in a couple of ways. And first of all, I should say one of the things that we don't like about tariffs is it often leads to inflation for customers and consumers. And we try to provide affordable food options and protein options for our customers and consumers. But we're well positioned to manage through this current tariff environment. We may see some higher prices as a result of tariffs on raw material going into the U.S. And of course, we'll have to deal with that, and that may lead to higher pricing. And when it comes to potential tariffs between Canada and the U.S., we're very fortunate. We have a plant in Lunenburg, Nova Scotia that primarily serves our Canadian market, and we have two plants in the United States that primarily serve our U.S. market. We do have some volume that goes from Canada to the U.S. It allows us to optimize our manufacturing footprint. And of course, if there are tariffs between Canada and the U.S., we'll have to look at that. But we're blessed with flexibility in our supply chain and capacity in our supply chain to be able to manage through that.
How big is the U.S. market for Highliner? Proportionately.
The U.S. market is very big for us. Yeah, 70% of our revenue is in the U.S., coming from both food service and retail in the U.S. However, as I said, most of that volume, in fact, less than 10% of our volume crosses borders. We're very fortunate that most of the volume we serve is either served out of our Canadian plant to Canadians or out of our U.S. plant to Americans.
So the environment of the market remains uncertain and challenging and full of unknowns, but you are telling the market and your shareholders that the company believes confidently that it can both increase sales by volume and continue driving adjusted EBITDA upwards.
That's absolutely what we're focused on as an organization, and we believe we've done the work over the last number of years to put ourselves in a good position to continue to do that, particularly in a category like frozen seafood, which we believe is well positioned for growth, as we talked about earlier.
Okay. Paul, thank you very much for taking a bit of time and talking to us about the company.